You are listening to chartingwealth.com for Friday, the 2nd of February, 2018. We see stocks down for the day, bonds down, gold up. Let's see how things are shaping up on the S&P 500 as depicted by SPY. What do we see going on with the 500 big stocks? We see the market down just barely 0.11%. So far, we have a green up candle for the week. We're 4 days into the 5-day candle. That candle will complete at the end of the week. We see the derivative oscillators lost a good bit of energy. Price percent oscillators moving up a little. It was flat before. It looks like it's ticking up just barely. The price percent oscillator, of course, is our master oscillator. That's still pretty darn flat. When we look at price itself, as far as our Heikin Ashi candlesticks go, we can tell that it is a flat price. The market did top off over the course of the prior week, ending on Friday the 26th. So this candle is not going to be as high. And again, sliding sideways as we look at the 2-day chart. We now have a freshly drawn candle, 2-day candle, which is a red close box down candle with a down wick. That, of course, means downward momentum. We see that the price percent oscillator is heading down, has not crossed the red signal line, and the derivative oscillator crossed over strongly, going down. So again, we've penetrated the 2-day trend line. We have the weekly trend line has not been penetrated at this point, but of course, if you jumped in anywhere along the way after the weekly vertical crossover all the way back on the 2nd of October, well, actually, it wasn't the 2nd of October, was it? It was, we're on the right around that. I think it was the 29th of September. So we're looking at the 2-day chart. And of course, the crossover was on the weekly chart. I've said it so many times. 29th of September is when that crossover going up occurred. And we have really probably maybe the second major pullback since then. Yeah. So again, keep your eye on the price. It did correct when that happened previously, back on the 15th, right around the 15th of November. We'll keep our eye on things. We've had some sideways slides along the way, and we've crossed over going down around that same time period back in mid-November, crossed over on the 2-day chart going down, had a little bit of a pullback right around the beginning of January, but of course that was never we didn't have any in either of these. We had no crossover going down, of course, in our golden, as we like to call it, weekly vertical crossover. So again, keep your eye on things. It is a pretty significant pullback. So if you've been playing in there, of course, please watch carefully if you don't wish to pull out your position at this point. Keep an eye on things. Now we look at the 4-hour chart. We see that the derivative oscillator has gone down significantly. The price percent oscillator is heading down precipitously. What do we see, though, as far as price movement goes on our Heikin Ashi candlesticks? Looks like things are flattening out. Now, may not hold this, but over the course of the day, we have 2 green spinning tops. Well, a green spinning top in the morning and a green doji in the afternoon. So again, lots of indecision, tending up. And we'll just continue to keep our eye on things. Have things sort of reached a bottom around 181, around 182, something like that? I'm sorry, 282. As far as price goes on the S&P 500, maybe. Keep your eye on the price. If we do see this 4-hour chart rotate over and start heading up, then of course, don't forget our 2-day chart and our weekly are still in confirmed uptrends. Might be an opportunity for you to jump back in on a ride up on the S&P. If that happens, could keep moving down. It could pull the 2-day over and could signify that we might be looking at a change in trend. At some point, what goes up does come down, my friends. Okay, that's where we're on the S&P. What do we see on the Qs? The NASDAQ 100, the tech stocks. We see down the most, well, not the most for the day. In fact, down about twice as much as TLT. We'll get to that in a minute, but down 0.85% are the tech stocks as depicted by QQQ, the NASDAQ 100. We still have an up candle, but again, a sideways slide. Price percent oscillator sliding sideways, derivative oscillator losing just a little bit of energy. Nothing like the S&P 500. As we look at the 2-day chart, It's also headed down on the price percent oscillator, derivative oscillator, still in the positive, but losing energy. And we see a penetration with the latest candle. Again, a spinning red top means indecision, tending down, penetrated, not anywhere near as bad as the S&P 500, but did penetrate the 2-day chart, still well above the weekly. When I say 2-day chart, I mean the 2-day trend line, still well above the weekly trend line. That's where we are on the Qs. As we delve in a little deeper look at the 4-hour chart, we can see there's down movement in the morning and the afternoon. We have wicks on both sides of the candles, so the bulls and the bears fighting each other out. Derivative oscillator picked up some downward momentum in the afternoon. And price percent oscillator kicked over, going down more for the day than it had been in the prior days. So we'll continue to watch things still. Really, even with the Qs, a sideways slide. We look at where it's bottomed out, pretty much 168.60, something like that, hanging right around there. Again, if we see really big pushes down, then of course more alarm bells will go off. We did have that weekly vertical crossover, and it did quite well for us back on the 5th, the week ending the 5th of January. So that was jumping in that following Monday. So again, don't lose what you've earned. Continue to keep an eye on things. And if indeed we see this 4-hour chart rotate and start going up again, as long as the 2-day chart and the weekly chart still have weekly and 2-day vertical crossovers going up, you want to jump into that baby and ride it. We'll see what happens, my friends. Back to the weekly chart, away from stocks to bonds. Now, bonds down the most for the day. But folks, that's what we wanted, right? We had a weekly vertical crossover going down for the week ending the 5th of January. And man, did we call it right? Is it not beautiful? And again, this is where you use inverse funds or you use options such as puts. And it has been absolutely beautiful when it comes to bonds. You want to know more about inverse funds? Please go to our training, Inverse Funds, How to Make Money When Markets Crash. You'll learn a little bit more about that. And what we see going on is price movement well below the 2-day and the weekly. Weekly headed down, quite strong down. Derivative oscillator gaining lots of downward momentum. Price percent oscillator barreling down, which is, of course, what we want to see with this down play. We also see price movement well below the 2-day trend line as we look at the 2-day chart. Derivative oscillator gaining energy. Price percent oscillator shooting down. Again, way, way down from our entry point somewhere, what, around the 125 or so mark, 125, 126, down, I guess, the lowest low so far, 120.63. So that's really nice on a $125 ETF. Seeing that kind of down movement over the course of just a couple of weeks. Quite beautiful. Things are, again, continuing to barrel down. What do we see on the 4-hour chart? We see down movement in the morning some, but really strong down movement in the afternoon. Derivative oscillator gaining energy, price percent oscillator shooting down well below even the Bollinger Band on our Heiken Ashi candlestick. So, good call, was it not, my friends, as far as the weekly vertical crossover? Aren't they beautiful? Learn them, use them, watch for them. Okay, lastly, we go to gold. Remember, gold had a weekly vertical crossover going up for the week ending the 5th of January. Had a lot of action that week. We had 3 vertical crossovers, 2 up, 1 down. And what do we see going on? Well, gold's having a bit of a pullback. We still have a we have an open box candle. It is red, does have a long wick on top. Derivative oscillator continuing to gain energy up on the weekly chart, and the price percent oscillator continuing to head up. As we delve a little deeper, look at the 2-day chart, we can see things there have pretty much gone flat over the last 2 2-day candles. Gold peaked there at 129.52, back on the 2-day candle ending the 26th. That was last Friday. And we've seen a sideways slide so far this week. Latest candle is a green spinning top, means lots of indices. It's actually a green. I'd pretty much call that a doji. It is a doji. A green doji means indecision, lots of it tending up. So that's where the latest but just indecision, sideways slide. We still have price movement on that 2-day chart above the 2-day trend line, just barely. and above the weekly. As we look at the 4-hour chart, what do we see? Well, that 4-hour chart looks like it's trying to bounce off a bottom there on gold. Let's keep our eye on things. If that chart crosses over going up, then of course that would be your signal to consider getting into an up move on gold. Now, you may have stayed in the up move on gold that started that Monday after the weekly vertical crossover on the 5th of January. If you have, then just continue to watch the 4-hour chart. If you haven't, that crosses over going up. Jump in and ride that on a virtual trade. Now, always give that caveat. We're not a stock calling service. We're an education firm. We do not give market advice. You don't pay us to give you market advice, nor do we give market advice. We are not a stock calling service. We're an education firm. We want you to train with us. We want you to do practice trades. One of the best ways to start really getting into this and doing practice trades is to subscribe to the paid portion of the service that we use. We use freestockcharts.com. The screencast we do every day is recorded on the backdrop of the layout that we use at freestockcharts.com. They have a paid service called TC2000, which is fantastic, and we have a deal for you, $25 off your subscription. 3 choices. If you'll just simply go to chartingwealth.com, you'll see on our daily market reviews, we've got a link where you can get that discount. Find out more about what freestockcharts.com and TC2000 can offer you. We love it. It is the best interactive layout and stock trading service stock charting service that I have ever used. Just absolutely incredible. Know Chris Warden had met his team, and they are incredible folks. Just put an incredible program together here. We love it. If you have questions, problems, concerns, you want to hear from us, know more about what we do, please by all means write us cw@chartingwealth.com. If you want to receive all the things that we do, the new chapters of our book as they come out, all the special trainings we do, and all the special offers and everything else we have going on, the best way to do that is to go to chartingwealth.com, put in your name, email address, and we will send you the daily market review every day. You can also sign up for our texting service if you're in the States. Doesn't work overseas, but we always tell you what's going on in our weekly comprehensive reviews and forecasts that we'll be recording the next one at the close of the market on Friday. And when there are weekly vertical crossovers, that's what we text out. We only text usually once, twice a month. But again, please sign up for that. Easy to do. You just text Charting Wealth, one word, to the number 33222. Forgive me again, 33222. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.